So halfway through the marathon, we bring us now with our sixth session for today by Miss Aarti Raote. Good evening, ma'am. Welcome. So Aarti Raote will be talking about TDS and TCS provisions brought in the finance bill. She has an experience of over 22 years and is a proficient in cross-border transactions. She has extensive experience relating to social security aspects, both in domestic and international markets. Her domain includes employees policy advisory, immigration, workforce transformation, and providing end-to-end solutions for mobility challenges. Ma'am, welcome aboard.
Hey, hi. Thank you so much for these kind words, and a pleasure to be part of this fantastic program.
You can share the PPT and take this forward, ma'am.
Sure. Kavita, will you be able to share?
Yeah, I'm sharing it now.
Right. So I will cover on the tax withholding provisions. And while, at times this is the most underrated kind of section of the Income Tax Act, this is also one of the most powerful tools in the hands of the government to augment the tax payer base and to enforce compliance and to plug in the tax leakage. So while this may be a little dry, but let me make it more interesting for you. So let's look at the first change that has happened in the budget provisions. It's related to 194 IA section. This section primarily deals with the requirement to withhold taxes when you are purchasing any immovable property other than agricultural land and you're paying to a resident seller. The taxes that are required to be deducted is at the rate of 1% when you are paying any sum to the transferor. And this provision is kind of triggered only in a case or only in a situation where the consideration is more than 50 lakhs. Now, the budget adds in another dimension to this provision by adding a deeming fiction of adding the stamp duty value to be the consideration if it is higher than the actual consideration that is paid. So the budget amendment, actually adds the words or stamp duty valuation, whichever is higher. And the explanatory note to the budget provides an explanation that the change was brought about to be inconsistent with the other provisions like 50C or 43CA, where they have already put in provisions to add in the stamp duty valuation. This provision, this new amendment is going to be applicable from assessment year 22-23. And for all practical purposes, stamp duty value is the value which is adopted by the authorities, which is central government or state government, in respect of any kind of immovable property. Now, one of the things that you have to remember is that this provision is applicable only for residents. So if you are paying amounts or you are purchasing property from a non-resident, then this provision does not apply. It is section 195 that applies to you, and there is no change in that section. So you will have to deduct taxes at appropriate rate there. There's also no threshold of 50 lakh limit which applies there. So in that case, you will have to apply for a tax deduction number and you will have to go through the normal or the longer process. There is no easy process here. But over here, the change is just that while deducting the taxes, it has to be deducted at 1% of the stamp duty value or the actual consideration, whichever is high. What I would say is a consequent kind of an amendment which has happened under 206 AB. Now, 206 AB, this section is kind of, the provision deals with a requirement to deduct taxes at a higher rate in case of specified people. And who are these specified people? It is basically people who've not filed tax returns for the last 2 years and where the time limit for filing the tax return has expired and the total TDS is about more than 50,000 per annum. So in these cases, the requirement is to file a tax to pay taxes or to deduct taxes at a rate which is far more higher than the normal rate which has been prescribed. Now, when we are talking about this, these kind of specified persons, the tax authorities have made a provision in the tax portal, whereby if you add in certain details of the payee, then you will get indication as to whether the person is specified or not. So that is the kind of assistance given to the payers to identify whether a person is specified or not. Now, the only change which has happened in this section is that there is an exclusion which has been made for 194 IA section. Also, there is an exclusion for 194 IB, which is a section where people are supposed to be withholding taxes on rent payment in excess of 50,000. So these two sections have been excluded from this onerous requirement to deduct taxes at a higher rate, and hence, that's a kind of relief that the government has kind of provided for the taxpayers and payees alike. Now, going on further to the more interesting section, which has created ripples in the practitioner fraternity, which is 194R. Now, this section has been introduced to withhold taxes on any benefits in kind which have been received by the consultants. There is actually a section already in place, which is 28.4, the charging section for business and profession, does provide that any benefits in kind which are received by as a part of the fees for services rendered or as a part of professional services is going to be liable to tax. This was the charging section. So obviously a person who is receiving such benefits in kind or perquisites had to offer this to tax. The government is observing that this is not happening, and there are several kind of professional services which are paid in kind, which are kind of, there is a tax leakage for this kind of a payment, and hence in this case they have provided now a tax withholding section, which is 194R, a new section that has been introduced to withhold taxes at 10% of the consideration or of the value of benefits that has been provided. Now, an interesting fact over here is that when you're talking about benefits in kind, it might be difficult for you to withhold tax in cash because there's no cash which is paid out, and in which case there is a provision which has been made to say that you should ensure that the taxes have been paid by the taxpayer before making a payment of the consideration to him. This provision kicks in or rather is triggered only in case of an individual or HUF whose total sales or gross receipts or turnover does not exceeds a crore. So it's not applicable to all and sundry, and it is also not applicable to in case of businesses where there is professional receipts of less than 50 lakhs. So these are the two exclusions that have been mentioned in this section. Of course, this section is a little troublesome both for the payer and the payee, because there is always a practical difficulty in getting a proof of tax payment where the whole payment is made in kind. And it is easy for the person to provide you with a challan, which may not really relate to your payment. So there is a need for a declaration also to be got in this respect. And of course, again, to determine, whether that person is really going to be offering this to tax or not. So while the section was already, in a manner already there, the withholding provisions which have been placed now place the responsibility on the payer as well as the payee to make sure that there is no leakage out here. So this is something that people really need to think about as to where this would apply. That would be a very, very relevant question. And as we have seen, some experts say that this would apply in all situations where if this benefit was not provided, the payer would have to pay cash instead of this benefit in kind. So very clearly, it has got a wide connotation and implication to a lot of people. Moving on to the next slide, we have another section which has been causing a lot of ripples and has invited a lot of comments from the taxpayers as well as the tax professional fraternity, which is 194S. This is one of the biggest change which has been introduced in the budget. And I think we had a detailed session preceding this session, where one of my eminent colleagues had provided a lot of details on virtual digital assets. This new section is where the taxpayers, when purchasing the asset or when paying the consideration for the transfer of PDA, have to withhold taxes at 1% of the consideration made. And if there is a case where the exchange is made in kind, which is a normal thing in these kind of transactions, in this case also the taxpayer has to make sure that the taxes have been deposited for this transaction within time before making the consideration. Now, there has been a lot of challenge around this provision, and we are hoping that in due course the government will provide a lot of guidance, a lot of processes around how to go about complying with this requirement of TDS. This is because when we are talking about some of the virtual digital assets, at many times it is going to be very difficult for the peer to actually identify who is the recipient of the consideration. So identifying the seller itself, given the manner of the transaction, is going to be very, very difficult. The second thing is, of course, as I mentioned earlier in this section 194R itself, that when you're getting a proof for payment of taxes, it's very difficult to, assess whether this tax payment is related to the transaction that you are undertaking, or it was, related to some other transaction. So that's going to be a very, very big challenge for any of the payers, and probably they have to get into a declaration for this. Again, one more basic challenge which the taxpayers would also face here is to ensure that they are actually transacting with a resident. It is very common and very much possible in these kind of transactions that the payment is made out to a non-resident, and in such case, it's going to be very, very difficult for a person to assess what would be the right rate of tax. So, given this kind of a challenge, it's going to be very difficult for a person to comply with these provisions in the long run without any guidance from the government. Now, moving on to the next amendment. This is an amendment in section 2011A. And as we all know, 2011A is a section which levies interest on any defaults in the payment of TDS. While 2011A is a very compensatory section and it's automatically levied, the current budget amendment proposes that the taxpayer would be required to pay the interest on the amounts determined by the taxpayer in his order. So there has been a similar amendment which is carried out in 206C, which applies to tax collection at source. So corresponding amendments carried out to ensure that the taxpayer is paying interest basis the order of the assessing officer and not really as per the amounts that he has determined. So it's necessary to ensure that they do that. Now, going on further, there's another amendment which has been carried out in 206AB. As I called out earlier, that there is a higher rate of TDS which is applicable in case of specified person which are people who have not filed their returns in 2 previous financial years. And now this period of 2 years has been reduced to 1 year. So where a person has not filed his tax return for one of the previous financial year, and the time limit for filing a belated tax return has expired, and the total amount of TDS or TCS, as the case may be, is in aggregate 50,000 for that year. In that case, now the requirement is going to be only for 1 year, not 2 previous years. This is an amendment that has been carried on. So I think that brings me to the end of the session for changes in respect of TDS. So.
Thank you, ma'am. Just a quick query which we have right now. One is on 194R. You say only it's on kind or kind in cash both. Kindly give some examples from FMCG sector.
There are a lot of transactions where people are providing a lot of gifts or a lot of benefits to the what I would say sellers or to their vendors in a lot of transactions. Now, one has to determine what is the nature of these transactions. For example, if it is really in lieu of your products or your services rendered, then in that case, it definitely is taxable because it was taxable under 28(4) itself. But if it is in a normal kind of a practice where we are used to giving gifts to different vendors, say customary gifts, like you have your festival gifts, you have your New Year gifts and things like that, in that case, to my mind, the section should not be evoked because irrespective of whether there is a transaction or not, or irrespective of what is the quantum of the transaction, it's not relatable to it. But there have been cases where, several times people don't really, raise an invoice for a particular amount, but get paid in kind. Maybe it's some kind of overseas trip or some kind of consumables. So those are the situations which really the finance minister is trying to cover here and ensure that the leakage is stopped.
Okay. Thanks. Another one is from Mayank. He says the Honorable Supreme Court in its judgment in the case of Mahindra and Mahindra has held that if the benefit of perquisite is entirely paid in monetary terms, then such benefits can't be taxed under Section 28, Clause 4. So since TDS under Section 194R is to be deducted on incomes falling under the said section, so similar ratio should also apply for this new sections, meaning thereby if such benefit is paid entirely in money terms, then TDS under Section 194R should not be applicable. Is this understanding correct?
So to a certain extent, I would agree with it because 194R talks about benefit or perquisite which is paid in kind. It specifically wants to, cater to that kind of this thing. If your professional fees are normally paid out in cash, then obviously your normal sections like your 194J or whatever will quicken. So those would not apply in this case. This is where you're giving a benefit in kind, which is where there was a need to bring about this particular change.
Okay, perfect. So that's good. Thank you for a great session, ma'am. It was indeed a pleasure having you on stage.
Same here. Thank you.